Bitcoin has been unstoppable since the last March stock market crash in 2020. In just less than a year's time, it has run up more than 10 times from $5,000 at March 2020 trough to the current $60,000 mark, hitting $1 trillion plus market cap. The meteoric rise is driven by the exponential money printing from both the central banks all around the world as well as the stimulus packages rolling out by the governments in the backdrop of the historic pandemic. The cryptocurrency has been gaining traction on many mainstream investors and corporate treasury. The most well-known example is Tesla's first foray into the cryptocurrency with $1.5 billion worth of purchase in January 2021. The latest price targets of Bitcoin range from $100,000 to $1 million per coin. As the sentiment surrounding Bitcoin has become euphoric, some investors are concerned that they are entering the highly speculative territory. Since last year's crash, the stock market and Bitcoin have trended together directionally for most of the period at the expense of the US dollar decline. With inflation fears growing, what if the government's tapering causes a broad market crash? The unwinding in the market could trigger a knock-on effect on the high-flying valuation of Bitcoin. In this video, we will look at 3 legendary investors' predictions on a Bitcoin crash along with the stock market. This is by no means any financial advice. We hope this video will help you to prepare for what could happen in this volatile market. Number 1. Michael Burry. One of the investors who voices out his concern is the Big Short investor Michael Burry. In our last video, we have talked about his prediction of hyperinflation and the historic stock market crash in 2021. As a sign of the speculative environment we are in, he has also warned about Bitcoin in his tweets. Michael Burry's track record has been astonishing. Like recently, he has successfully shorted Tesla since December 2020. The stock has lost around 25% of its value from its peak so far. In a recent tweet, Michael Burry warned that Bitcoin's price has risen to unsustainable levels, and buyers have taken on dangerous sums of debt. Bitcoin is a speculative bubble that poses more risk than opportunity. If you do not know how much leverage is involved in the run-up, you may not know enough to own it, he added. According to Dr. Burry, the hype surrounding Bitcoin, electric cars, SaaS companies, and meme stocks, like GameStop and AMC, is very similar to the housing and dot-com bubbles. The massive hype surrounding Bitcoin is not entirely baseless, but he doesn't think it will last. On the whole, not wrong, just driven by speculative fervor to insane heights from which the fall will be dramatic and painful, he said. He has also fenced off the critics for his fellow investors, namely Charlie Munger, Warren Buffett's business partner, and hedge fund billionaire Paul Singer, who have made very similar observations as Burry. We will discuss their advice in detail later in this video. Given the popularity of Bitcoin, Burry's negative comments are not very well received by the crypto community. Burry said in February that he didn't hate Bitcoin, but questioned its long-term viability. He predicted that governments would combat threats to their currencies and their monopolies on currencies by launching their own digital notes and coins, using the same blockchain technology. If you find our videos providing you value, don't forget to subscribe to this channel, and you will be alerted whenever our new videos come out. The governments are unlikely to allow Bitcoin or other altcoins to thrive and remain decentralized in the long term. This argument is somewhat echoed by Ray Dalio's recent comment on Bitcoin. Dalio does not think government agencies will allow Bitcoin to flourish as an alternative to printed money as it is becoming more and more popular. If you would like to know about Dalio's view on Bitcoin, please let us know in the comment section. We may produce a video on Dalio if there is enough interest. In a separate tweet published on February 22, Burry also pointed out that Bitcoin does not provide a solution to Triffin's dilemma, as a global fiat economy is relative and requires cheap liquidity from the largest economies in the world. That is why Swiss franc, Switzerland currency, cannot be a reserve currency, he explained. The reserve currency status needs to go to the GDP champion. There is a conflict of economic interests between short-term domestic and long-term international objectives for countries that control global reserve currencies. Because of this, Burry suggested that Bitcoin cannot be a reserve currency. Number 2. Charlie Munger. Charlie Munger, Warren Buffett's longtime business partner, another legendary investor featured in our last video, dismissed the rocketing share price of Tesla and the recent Bitcoin frenzy. "I don't think Bitcoin is going to end up the medium of exchange for the world. It's too volatile to serve well as a medium of exchange," he said. During an interview at the Daily Journal's annual shareholders meeting, Munger was asked which he thought was crazier, the price of Bitcoin hitting $50,000 or Tesla's $1 trillion market cap. He said he doesn't know which one is worse. Munger referenced a quote by famous English writer Samuel Johnson. "I can't decide the order of precedency between a flea and a louse. I don't know which is worse." To add fuel to the fire, Bitcoin is now part of Tesla's sum of the part valuation after its recent purchase of the cryptocurrency. Which means Bitcoin may further exacerbate the volatility of Tesla's stock price. It may also make the speculative frenzy of Tesla and Bitcoin even more intertwined, given their similar cohort of following. Number 3. Paul Singer. In a recent interview with Grant Williams, the founder of New York-based Elliott Management pointed to the explosive growth in crypto assets as a prime example of irrational exuberance in today's market. He said, "I've been investing for a long time, and I gave up a long time ago, trying to base my investment management activities on the concept that markets and investors and traders are rational. People try to be rational and think that they're rational, but quite frequently they're not. And there is hardly a better example today than cryptocurrencies." Singer's comments contrast sharply with the recent flurry of financial institutions supporting Bitcoin, including the announcement that investment powerhouse BlackRock will green-light 2 of its funds to invest in Bitcoin futures. The hedge fund tycoon agrees with a growing list of Wall Street skeptics, who are concerned about central bank stimulus, but he does not believe Bitcoin is the best way to mitigate that risk. With constant stimulus neutralizing bond yields, capital will look towards new places to generate returns. That will push investors to move out further on the risk curve, and likely into more speculative assets such as penny stocks, IPOs, and digital assets. In a letter to customers, Singer further expressed his pessimism about Bitcoin and Tesla. Singer predicted Bitcoin's crash, eventually resulting in a "we told you so" moment. In final words, all 3 billionaire investors share a similar sobering view on both Bitcoin and Tesla. Let alone the long-term viability of Bitcoin and blockchain as the dominant monetary system in the future. For the current cycle, the prices at this level look extremely speculative and frothy that every investor should take note of. When the stock market crash comes, which seems inevitable, the highly leveraged crypto market is unlikely to be left unscathed. When the music stops, you don't want to be the one left holding the bag. It is important to be prepared and not get caught up in the FOMO and hype characterized by every speculative bubble. Thank you for watching. Feel free to check out our last video on the next stock market crash.